Welcome to Dubai Daily, your essential morning briefing on Dubai's real estate market, brought to you by Parag Kundalwal, founder and CEO of Consulta, a Dubai-based real estate consulting and global capital advisory firm. This is episode 10.
Good morning, Daniel. Today we're diving deep into market timing and investment strategies, with a special focus on the 2025-2026 outlook and the ever-popular off-plan market.
That's right, Lily. The big question on every investor's mind is, what's next? It seems Dubai's real estate market is entering a new phase of maturation after years of incredible appreciation.
Exactly. Projections show average property values rising by approximately 8% through the end of 2025. But there's also talk of a potential correction, isn't there?
There is. Some forecasts predict a 5 to 10% price correction in the second half of 2025 and into early 2026. Experts are calling it a market recalibration rather than a reversal, which is an important distinction.
And it's not a one-size-fits-all forecast. The luxury segment is a world of its own, hitting historic highs. Transactions for homes over $10 million reached a record $2.6 billion in just the second quarter of 2025.
Prime and waterfront zones are expected to keep climbing, maybe 4 to 6% by year-end. Limited availability and strong international demand are keeping those premium properties very resilient.
On the other hand, the mid-market segment could face some risks, with a potential 10 to 15% price correction where supply is most concentrated. However, those same communities are also expected to offer very attractive rental yields.
It feels like the market is shifting from speed to selectivity, from volume to value. Investors are taking a longer-term view now, which is a sign of a healthy, maturing market.
Speaking of supply, that's the next big headline. Dubai is on the brink of its largest supply wave in over a decade.
The numbers are staggering. We're looking at nearly 120,000 handovers expected in 2026 alone. That's up from around 90,000 in 2025 and just 30,000 in 2024.
So between 2025 and 2026, that's over 210,000 new units. An 80% increase in supply compared to 2024. Naturally, that will apply some pressure on prices, especially in resale-heavy zones.
Yes, but there's a crucial caveat. Historically, actual completions in Dubai run below projections. The average is about 56%, which could significantly soften any immediate oversupply risk.
And demand is keeping pace. The population is projected to surpass 4 million by 2026, and government initiatives like the D33 Economic Agenda and the Golden Visa program continue to fuel incredible demand from around the world.
Which brings us to strategy. For November 2025, is investing in off-plans still the recommended move?
Absolutely. The advantages are still very compelling. Off-plan properties are typically priced 15 to 30% lower than completed units, and developers are offering incredibly attractive and flexible payment plans.
Think a 10 to 20% down payment with staggered installments tied to construction, and sometimes even post-handover payment plans. It makes entry much more accessible.
Plus, you get to ride the wave of capital appreciation. With prices projected to grow another 5 to 8% this year, buyers can see appreciation of 15 to 25% by the time they get the keys.
And we can't forget the rental yields. Dubai consistently offers 6 to 8%, which is well above global averages. Selected off-plan projects are even hitting yields up to 12%.
And the benefits keep coming. Waived DLD fees, rental guarantees from some developers, and of course Dubai's investor-friendly policies, like zero property tax and the 10-year golden visa for properties valued at 2 million dirhams or more, even off-plan.
So where should investors be looking? What are the strategic locations right now?
For steady cash flow, Jumeirah Village Circle, or JVC, is a powerhouse, with an average rental yield of 7.82%.
For growth, eyes are on Dubai South, with a potential of nearly 45% by 2026, and Creek Harbour, offering that premium waterfront lifestyle with a potential growth of over 32%.
And of course, the established high-demand areas remain strong. Downtown Dubai, Business Bay, Palm Jumeirah for the ultra-luxury market, and Dubai Hills for families.
The latest numbers certainly back this up. The final week of October 2025 saw a massive 20.57 billion dirhams in transactions.
And year-to-date through October, Dubai has already recorded 559 billion dirhams in property sales. That's already surpassed the entire record-breaking year of 2024. Confidence is clearly still very high.
So, let's summarize the key takeaway for our listeners. November 2025 is a strategic window, especially for off-plan.
Focus on emerging areas like Creek Harbour and Dubai South for maximum capital appreciation. And diversify with high-yield rental properties in places like JVC for steady cash flow.
And if you're investing 2 million dirhams or more, you're not just buying a property, you're securing long-term residency with the Golden Visa and adding stability to your portfolio. Just be sure to choose reliable, verified developers and plan for the long term.
Great advice, Daniel. For personalized insights and advisory, you can contact Parag Kundalwal at Consulta. You can find Parag Kundalwal on LinkedIn. Visit the website at consultadxb.com or email parag@consultadxb.com.
You can also reach him by phone at +971 58596 4631. Join us again tomorrow at 7 a.m. Dubai Daily is here for you, Monday to Friday.